Whenever we invest in a company on the long side of the portfolio, we try and break that company down into the 2 or 3 things that matter for the company. And for every company we've looked at, we believe that there are just 2 or 3 things. A company like Wesfarmers, for example, big conglomerate, if you just get Coles right and Bunnings right, you've got nearly 75% of the earnings of that business right. So every company, we distill it into those 2 or 3 things that matter. Valuation is very important for the long side of the absolute return portfolio. And we think about valuation of a stock relative to its history versus the market. What we also need to see is that it's not going to miss expectations in either the short, medium or long term, i.e. next 1, 2 or 3 years. We don't want to see an earnings downgrade there. If it meets those criteria, it can be a candidate on the long side of the portfolio. For the short side of the portfolio, we actually put valuation right to one side. We don't think valuation is a good indicator for a short candidate. You need to have a catalyst for a share price to go down, and typically that's either current earnings risk, i.e. is the company going to miss its February, August AGM update expectations, or future earnings risk. Is there a new competitor coming into an industry, or is there contract losses coming through? Something that doesn't affect earnings straight away, but will be reflected in the share price straight away. On the long side of the portfolio, one of the key positions in the absolute return fund has been Qantas. And when we look at Qantas, one of the key things we do research on, and one of the key things that matters, is airline industry supply and demand. So between 2004 and 2014, we saw Virgin Australia, the key competitor in the domestic market, go from 0 to 35% market share. There was a price war going on then. Since then, we've actually seen industry capacity decline. That's great for ticket prices for Qantas, and it also means they can fill up more seats on their planes. You put that together, and it's a recipe for increasing profitability. Looking forward, we can see that still happening into the future based on our research. Looking about 12 months forward and doing ticket price surveys, load factor surveys as well, it suggests that rationality in the market is continuing, and we can still see valuation upside for Qantas as well.